Good evening, Jakarta time. Good evening as well for those watching from Hong Kong, Shanghai, Dubai, Singapore, Tokyo, and Seoul. Good afternoon for those joining us from London and Paris, and good morning, New York time. Thanks for those joining us on YouTube, LinkedIn, Facebook, and Instagram, because we live stream this webinar as well on these digital platforms. Hello and welcome to Road to New York, Indonesia Investment Forums by Sector Series 2022. Today we will be discussing about Invest in Indonesia Infrastructure Part 3 specifically and Invest in Indonesia generally. I'm Aling Bratmaja. It's my pleasure to be the host for today's webinar. I'm honored to acknowledge the presence of our notable speakers. A warm welcome to Mr. Brian M. O'Connor, Principal and Co-founder of Falcon House Partners. Good evening, Jakarta time. Mr. Brian O'Connor, please unmute.
Hi, everybody. Great to be here. Great to be here.
Yes, our pleasure. Thank you very much for making the time to join today's webinar. And I would also like to welcome Mr. Thomas J. Hayes, Chairman, Great Hill Capital LLC. Hello, good morning.
Hi, Aline. Thanks for having me.
Are you in New York or in Connecticut?
Today I'm in Connecticut.
In Connecticut. Okay, good morning to you. Thank you for joining our webinar, and welcome to Mr. Christopher Wilota as well, founder of Indonesia Investment Forum. Hello, Pak Chris. Thank you so much.
Hello, Aline. Hello, Tom. Hello, Brian.
Yes. Thank you very much. It's our pleasure to have you all here, our wonderful panelists. First of all, I would like to extend our sincere thanks and gratitude to all who have supported the New York Indonesia Investment Forum by Sector Series 2022, Indonesia Young Entrepreneurs, Power PR Indonesia, Waskita Karya, Mitratel, Daya Mitra Telekomunikasi, Hammerslag, Zul's Burger Board Capital Markets, Wijaya Karya, Hutama Karya, Semen Indonesia, Kata Data, Kitacom Strategic Indonesia, PDPP, Pelindo, Great Hill Capital LLC, and Falcon House Partners. Amid global recession fears, Indonesia's economy grew 5.44% in the second quarter of 2022, well above forecast and consensus. Solid growth of household consumption and impressive export growth on the back of high commodity prices, as well as other factors, have helped Indonesia to achieve promising and optimistic economic growth. As economic activity has been better than expected, this allows us to have more optimistic views and attitude towards economic expansion for the rest of the year in Indonesia. Therefore, we are pleased to present you Indonesia Investment Forum, Invest in Indonesia Infrastructure Part 3. We encourage all participants to engage in the discussion actively by writing down your questions in a chat box on this Zoom platform. We will be discussing your questions in a Q&A session at the end of the webinar, so please stay tuned. For your information, other than the free webinars that we held in July and in August 2022, Indonesia Investment Forum will be organizing in-person conferences in Manhattan, New York in September, October, and November 2022. For more information on that, you can click our website www.indonesiainvestmentforum.com. And to find out more about the objectives and programs of Indonesia Investment Forum, I will invite Mr. Christopher Wilota, founder of Indonesia Investment Forum, to deliver his opening remarks. The time is yours, Mr. Wilota.
Thank you, Aline. Actually, this is a very good moment for us to focus how to invest in Indonesia. So basically, New York Indonesia Investment Forum. Next. Yeah. Next. Okay, next. Basically, Indonesia is already declared that for 2023, the target of the investment to Indonesia is 1,009 trillion. So basically, this is the increase more than 50% than this year. Next. Next. So basically, why we invest to Indonesia? Basically, a lot of things that we know that Indonesia have a lot of island. We have more than 17,000 islands. Basically, we are the the population is more than 270 million people. So this is the fourth most populations in the world. And also we also the 10th largest economy in the world in terms of power parity. And also we have the largest percentage of young people in the world. So basically this is very important that young people percentage in Indonesia is very huge and largest in the world. So basically the future of this country is on in the hand of the young people, and they the one who make disruptions in every single area, and they change a lot. And this is the future of Indonesia and also future of the world. The other thing is Indonesia economy is the fastest growing in the world. And the other thing, a lot of people in the world mentioned that Indonesia predicted as the fourth largest economy in the world by 2045. We can see the growing very fast. The growth is very fast, especially in the young people. And we can see right now in Jakarta, we have more than 200 largest shopping malls. This is not only small shopping malls like we have in Hong Kong or Singapore, but this is very, very huge 200 shopping malls. Next. Next. Yeah. Next. Okay. Uniqueness. We go to the uniqueness of Indonesia Investment Forum. Basically, this investment forum, next. I'll go back. Because the operator is not in our place. Can you back? Hello? Okay. The uniqueness of Indonesia Investment Forum, basically this is a private initiative. So because of the private, so the process and procedure is less bureaucratic and less formality. And the other thing is this focus on the sector by sectors. And the other thing is mostly we do it monthly basis conference. Why we do it monthly basis conference? Because by sectors. We want to focus by sectors. So basically, by sectors, we have to invite global investor that focus on that sector, and also the investee that focus in that sector. The other thing is in the global, we make it not in Indonesia, but in Singapore, Hong Kong, and New York. So basically, we do it in global investment cities. For the investors, it's not only capital market, but also non-capital market investors. And also investor is some investors, strategic investor, and the other investor is portfolio investors. And investee, basically we open for any single entity from Indonesia that's looking for investors that considers corporations, state-owned enterprises, provinces. Yeah, we need to help provinces in Indonesia. They need investment so badly, and cities also, startups, companies, and many like small medium enterprises that we think to make a bundle of them so we can bring them to global investors. And we have integrated services. And the other thing that we do uniquely is we handle the domestic and global news management carefully, not only in Indonesia, but also the global news, investment news. And the other thing is we do the mainstream and social media. So like this webinar, we have 5 different platforms like LinkedIn, Instagram, Facebook, YouTube, Zoom. So basically, we invite so many people come and learn from the discussion. Next. Next. Hello. We go to the integrated services. Next. Hello.
It's
So
been
basically
displayed already, Pak.
Okay. The integrated services, we start with grooming. What is grooming? Basically, we found that some provinces and found cities in Indonesia, they need a lot of investment. They need to build their province and cities, but sometimes they don't understand how to deal with global investors. So basically, with this grooming, we help them to be able to deal with global investors. We groom them how to speak, we groom them how to communicate, we groom them how to prepare the info memo, we groom them how to do a presentation and every single things. And also we do groom them how to deal with the investors as investor relations. The other thing, we help them to make a news. So basically, global investor will understand and can feel the heartbeat of every single company, every single state-owned enterprises, every single corporation, every single province, every single cities, and every single startups. So basically, with that kind of heartbeat, global investor can understand the growth in that area. So they will invest to that particular area. The other thing is we do investment info memo also. We help them to make the investor investment info memo. Of course, we do the investor finding, meeting with investor, not only in the webinar, not only in the in-person conference, but also in one-on-one meeting. So one-on-one meeting is the one of the best method to meet between investee and investors. And the other thing is investor relations. From our past conference, Indonesia Investment Forum in Singapore and Hong Kong, we get more information, specifically complaint from the global investors, that basically when they do and asking something to the investee, the response is not fast. Sometimes there is no response at all. When we find out, basically, not because they don't want to respond, but they don't know how to respond. So basically, this investor relation is a pool resources that can help every single companies and province and city in Indonesia to relate with the global investor. So basically, if the global investor call, somebody from investor relations will help to answer. If global investor asking for some detailed informations, the investor relations desk will help them. Next. So basically, this year, in 2022, we already have 3 different webinars. So basically, in the three pictures, we see that this is the webinars of Indonesia, Road to New York Indonesia Investment Forum. The pictures below is the in-person conference in New York, Manhattan. So we plan in September, October, and November. So basically, this is by sectors. Why by sector? As I mentioned before, because every single sectors, they have their different players, different investee, different investors also. So we have to make focus on that sectors, and not like other investment forum that this is very simple and very focused, not glamorous conference. We don't do any particular glamorous and more sophisticated or formality, but we more focus on the investor and investee match. We have 2 days in every single month. First is conference for 1 day full conference. And the next day after that, we prepare the one-on-one meeting. So every single investee have their own room, and we plan every single investors from global will meet the investee one by one, and we give them a schedule on that. Next. Next. So what sectors that we want to do? We want to do infrastructure, agriculture, manufacturing, property, banking and finance, health, education, tourism, logistics, plantation, satellite, energy, oil and gas, mineral and coal, fishery, aviation, and startups. So many sectors, yes, because Indonesia is growing very fast and we need all of it. So basically every single month, September, October, and November, we will discuss every single sector. And after that, next year, start from February until November, almost every month, we will make Indonesia Investment Forum every month, 2 days, conference and one-on-one meeting, and focus in every single particular sectors. So basically, this is very important because we need not only ceremony, we need the deal. We need the investment come to Indonesia. Not only that, we need the technology also. So we invite also the strategic investors who want to share their knowledge, know-how, technology, and want to develop that industry in Indonesia. Next. This New York Indonesia Investment Forum basically supported by PR, Waskita, Mitratel, Harmslah, Wika, Utama Karya, Semen Indonesia, Kata Data, Kitacom, Strategic Indonesia, Pelindo, Great Hill, Falcon House Partners, and PayPay. And basically every single month, the number of the one who support us is growing. So basically, we know that we are creating market actually, not only the event, but creating a market. And every single time we make a webinar or conference, and every single times we are running, the market is growing and growing and growing. Right now, for example, the audience of this webinar from the 5 different platforms is growing almost double than before. So basically this is the indicator of very good indicator for us. And the other thing is also media covering us in so many publications. So this is the very, very good indicators for us. Next. Next. So basically, we invite you to visit indonesiainvestmentforum.com. And if you have some questions, you just click and send email to us. And we have a lot of email and also message that we get. That's very good for us so we can understand you better. So we can understand how to serve you better. Thank you, Alin. Come back to you.
Yes, thank you, Mr. Christopher Wiloto, for the introduction of Indonesia Investment Forum on what the organization is trying to do for the country to attract as much investment as possible, as many investors as possible to invest in Indonesia. Without further ado, I would like to invite Mr. Brian M. O'Connor, Principal, Co-founder, Falcon House Partners. Brian M. O'Connor founded Falcon House Partners in June 2011. Falcon House is one of the biggest private equity fund in Southeast Asia, focusing in Indonesia. He was a vice chairman of Nomura Asia in 2008. Prior to that, Mr. O'Connor was managing director of Lehman Brothers in 1990 to 2008 in Tokyo, Jakarta, Hong Kong, and New York. The time is yours, Mr. Brian O'Connor. We're looking forward to having your presentation. I think there might be some trouble with the connection. We're trying to get Mr. Brian O'Connor at this moment. I think we're still having a trouble, and let's move on to Mr. Thomas J. Hayes, Chairman, Great Hill Capital. Actually, he's supposed to talk for the session, but we would like to have Mr. Hi, Brian, are you with us? Sorry, I think we have trouble with the connection. I have introduced you to the audience and looking forward to having your presentation.
Great. Thanks, Elena. Should I get started?
Sure.
Hi, everybody. Thanks for joining. It's a pleasure to speak with people. I've been actually speaking to investors about Indonesia for more than 31 years. I actually, in 1991, was on the Calbe Pharma, and Calbe Pharma, you may know, is a large pharmaceutical company, in the country on their roadshow. And subsequent to that, at Lehman, participated in probably over 50 roadshows for IPOs, a whole bunch of government roadshows. So, I particularly like speaking to investors because I love the country and I love what it has to offer the world, and particularly now moving forward, what it has to offer investors at a unique moment in time in the country. And I was actually, I'm in Jakarta now, but I was in the US for most of July, speaking with investors, not public investors, but investors in private equity, hedge funds, and venture capital. And the really warm reception I received about the progress the country has made economically, politically, financially was quite something. And so I'm quite pleased to speak to you tonight. If you can do the next slide, please. Yeah, there you go. Just very quickly on us, so you can, have some perspective. Private equity is not a particularly large industry in Indonesia. There's only a few of us doing it. Falcon House really focuses on the consumer GDP demand growth across a wide range of industries. We've raised 2 funds. We have about $1 billion of assets under management. We're really focused on partnering with, great founders, great entrepreneurs, great businesses, helping them grow, not only with capital, but with value add, a traditional growth private equity model that I think is incredibly well suited to what's going on in Indonesia today. It is a high growth environment that requires not only this type of capital, but skill set. And we're very, very happy to be able to bring that to the country. If you could do the next page. To just give you a sense of, I've got 4 partners that work with me. Glenn Youssef, Pak Glenn, somebody who Chris, we both worked for many years ago, was one of the most prominent financial figures, in the country. Samir Suda, a longtime private equity financial expert. Henry Goliano and Alexander McCloskey, also extremely well known in financial and private equity circles in the country. The 5 of us run Falcon House out of Jakarta and Singapore. The next slide, please. Just to give you a sense of our portfolio, so you get an insight in our investing mindset. Probably the most well-known asset, on this page, is Potato Head. Anybody who's ever been to Indonesia, to Bali, hopefully has visited Potato Head. It's one of the most iconic brands, in the country. But we're also one of the largest full-service restaurant owners. We're a leading healthcare investor, consumer products. We recently invested in the largest e-commerce, or the second largest e-commerce logistics platform in C. Cepat. Food manufacturing, retail. So a wide range of businesses. that really focus on the Indonesian consumer and demand-driven growth, GDP growth in the country, and it's a strategy that's worked very well for us and for our investors, and I suspect that'll be the same moving forward. But what I really want to talk about, is Indonesia itself. If you could slip to the next slide. As I said, I've been doing this for a long time, beginning in the early 1990s. And there's 5 boxes on this page, and Indonesia really had 2.5 of them for most of that period since the early 1990s. It's always had a consumer-driven economy, and it's always had great demographics. Commodities has been cyclical. It's come and go depending on global commodity cycles, but that's changing, and I'll speak to that in a bit later. But where Indonesia is really driving aggressively forward is productivity, led by massively increased investment in infrastructure, under President Jokowi, as well as FDI and investment, whether it's the omnibus law, various different reforms that have taken place, during the Jokowi administration. You're seeing record FDI in the country, and as we're seeing coming out of COVID, record domestic capital investment as well. It's really a unique moment in time for the country, and I suspect that we'll see some significant outperformance of Indonesia relative to most emerging markets over the next decade. If you could change the next slide, please. Not only do you have this secular high GDP growth, moving forward, but Indonesia is critically important globally now, both politically, from a commodities perspective, militarily, and as a result of that, the country's economy will benefit. Many people don't know Indonesia for being a country with significant financial stability, but in fact, it's one of the most stable emerging markets in the world, if not the most stable, and I'll touch on that in a second. And it's got a government that's demonstrated incredibly smart and responsible policy making, both on the fiscal side and the monetary side, during this very difficult COVID period, and I'll speak to that. And lastly, it's really in a new position from a global mega trends perspective. Digitalization is something that's overtaken the country. Since 2016, there's been over $30 billion through venture capital invested, in the country, which has been incredible and benefits for businesses and consumers. Decarbonization is a big theme here. Supply chain diversification as China continues to have trouble. And so there's really so many things to talk about, Indonesia. I'm going to dive into a slight amount of detail on some of these things. If you can turn the next slide, please. I think some of these points have been touched on previously. I just want to mention, something that hasn't been mentioned, and that is, Indonesia is a thriving democracy with freedom of the press, a constitution modeled after the United States, which is pretty unique. But it's also struck a incredibly important strategic balance between the increasingly bipolarized world of the U.S. and its allies on one side, and China and its allies on the other side. It's managed to be friends and investment partners with all parties, and this has been a particularly strong skill of Jokowi, and historically in Indonesia, its political leaders have been able to thread the needle, between balancing powers, and as we go forward, and in these times, geopolitical, volatility, if you will, Indonesia has even a more important role to play. Next, please. So before Indonesia and in the last commodities boom in 2009 to 2013, primarily driven by thermal coal, was very cyclical. We expect, though, that the benefits of this commodities boom will be secular, primarily because the commodities which Indonesia produces are going to be significant contributors to the electrification of the world. Indonesia is the largest nickel producer in the world. We control about 30% of nickel reserves. Tin, number one, bauxite, the number 3 exporter, copper, number 6. All of these are incredibly important, as you know, for the electrification of energy. And not only that, traditional energy stalwarts such as thermal coal, where we're the largest exporter, in natural gas, because of underinvestment in these areas, in addition to palm oil, we expect structurally high prices in Indonesia to benefit, for some time to come, right? Which is one of the reasons you've seen Indonesia's currency outperform most currencies during COVID, and again during periods of high global economic volatility. One would expect, based on historical precedent, to see the rupiah, be highly volatile, but in fact the opposite was happening. Next page, please. Many people look at Indonesia and they think immediately coal and palm oil and these things, and it's a big commodities producer, but in fact it's one of the biggest consumer economies in the world. And the Indonesian consumer is perennially optimistic. They like to spend, more than they like to save. And that's why Indonesia, through good times and bad, sees high secular economic growth. Indonesia, even in 2008, during the depths of the global financial crisis, grew at 4%. And that's one of the strongest points of the economy is its diversification. What we've seen recently is investment has increased, which we like to see for long-term sustainable growth once the demographic dividend diminishes, in about 10 years. The other interesting thing about this slide, and I'll point again and again to highly responsible government policymaking, is the government's only about 10% of GDP. That compares to European economies up to 35, 40% of GDP. It runs a very lean and mean, government with low budget deficits, which I think as an investor, is very attractive. Next slide, please. This is what I mentioned before. This is a pretty astonishing slide. People have been around in Indonesia, way back in the 2000s and 1990s. You saw sometimes $3 to $5 billion a year being put into infrastructure. Since President Jokowi took over, we're seeing $50+ billion a year, 2.5% of GDP put into infrastructure. Which, it's living in Jakarta, you feel every day, traveling around the country, you feel every day, owning businesses that benefit from better logistics, you feel it every day. It's really transforming the country, and it's something that I think goes largely unrecognized in the investment community, and it continues, and, it will pay dividends for many years to come. Next slide, please. I mentioned this digitalization, happening. We're not VC investors, but our businesses really benefit from all the VC investment, being put in. And $33 billion when you've got $1 trillion economy is, quite a large number. Hundreds of businesses, B2B businesses, B2C businesses, e-commerce, fintech, health tech, agri-tech. There's over 130 venture capital firms that are institutionalized investing in Indonesia today. And, it's really transforming the country, and helping businesses and consumer and government and financial institutions leapfrog in terms of productivity. And it's something you're just starting to see the benefits of today. Next slide. And I'll just conclude. I'm running out of time here and talk about unrivaled stability.
Please feel free to take as much time as possible, to finish your presentation. No worries.
Yeah, I mean, one of the things that I always talk about is how investors misprice the risk of Indonesia. And I'll touch on some specifics here. But first of all, you've got an incredibly strong banking system. The capital adequacy ratios in the Indonesian banking system are north of 24%. It's one of the best capitalized banking systems in the world. In fact, you could really argue that it's too conservative. It's too hard to get a loan in this country. Loan growth is too slow. The banks are too tough. And that probably slows down economic growth. But it makes for a very, very stable system. You've also got a current account and trade surplus. disciplined financial and monetary management. And if you turn on the next slide, one of the more interesting statistics in global emerging markets is this, which is, if you look at Indonesia over the past, if you ask yourself, what's the least volatile emerging market? And in fact, the least volatile country in the world from a GDP perspective, you'd never guess Indonesia. But in fact, it is. It's the least volatile growth economy in the world, which makes, as an investor, predicting outcomes more certain and reduces the risk premium on making investments in the country. If you go to the next slide. This is one that the country can be particularly proud of. It's got the lowest debt to GDP of any major emerging market and any major, economy in the world, quite frankly. We're at about 83% of GDP, versus, the rest of Asia and India pushing 175 to 200%. Places like China, the US, Japan, depending on how you calculate it, up to 300%. This makes for a much less volatile credit environment, less volatile FX environment. And again, from an investor perspective, easier to operate in, and the risk premium, as I said, for the country is, I think, a lot less than people project. And, having operated in the country for a long period of time, I will tell you that this wasn't the case in 2007, 2008, where you had a massive credit imbalance in the country. But, the policymakers really fixed it. And the banking system and the financial system is incredibly well run now. Next page. And this slide shocks everybody. When I showed it in New York, even last week, that Indonesia is the only major the Bank Indonesia is the only central bank that actually shrank their balance sheet during COVID, right? Which is one of the reasons you have controlled inflation in the country. Inflation, we're at 3.5 to 4.5%, compared to 9.5% was the late, and north of that in the United States and elsewhere. Again, points to the fact that the country is very disciplined in the way it runs its monetary system and physical system. But it's an impressive performance by Bank Indonesia. Next. Yeah, and I'll just summarize. I think I've hit on all these points. You can tell I'm very biased for Indonesia. I think it's a pretty unique moment in time in the country. The president has done a terrific job. His cabinet's done a terrific job, and really makes it easy, or easier. It's never easy in the emerging markets, but easier for investors to come and make money in the country and participate in all the growth and all the mega trends that are really driving returns and will continue to drive returns in the country. So I'll stop there.
I would love to hear more, because you say so many good things about Indonesia that make us really proud. I think this is what we need to hear about Indonesia: financial stability, good regulations, and also a very promising demographics, strong consumption, and now it is driven by the commodities boom in Indonesia. Would love to talk and discuss more about this later, Brian. So I would also like to invite all participants watching this webinar joining this webinar on Zoom or on YouTube, LinkedIn, other platforms. Please feel free to ask questions. Just write them down in the chat box or in the comment section. We will collect your questions and discuss it in the Q&A session. Once again, thank you very much for your comprehensive presentations, Brian O'Connor. I'm sure if you explain Indonesia this way, I'm sure that we will have more investors coming and invest their money in Indonesia. Thank you once again. And next, as I mentioned before, we're also joined by Thomas J. Hayes. So I will read out a short bio about Thomas J. Hayes. Is the chairman and managing member of Great Hill Capital LLC, a long-short equity manager based in New York City, servicing accredited investors and qualified institutions. Tom makes regular TV appearances on Fox Business, Yahoo Finance, Bloomberg, BBC. He is frequently quoted in the Wall Street Journal, Financial Times, CNBC, Reuters, also TV appearance in CNBC Indonesia. Thomas graduated from Columbia University. He serves on a pension commission for the town of Richfield in Connecticut. Thomas shares his stock market commentary and insights at hedgefundtips.com and hosts a weekly podcast as well as video cast. So please welcome Thomas G. Hayes. Thank you so much for making the time today. Looking forward to your presentation.
Thanks for having me, Aline, and so nice to be back with you. The first time we met was on CNBC Indonesia, if I recall. So glad to be with you. So we can move on to the next slide. So a little bit about us before we get started. Great Hill Capital, as Aline said, runs a long-short equity strategy in separately managed account format for accredited investors and qualified institutions. We've really developed a reputation over time for benefiting from sector, country, and general dislocation in periods of distress, whether that's company-specific, sector-specific, country-specific, or general market. We also run a website where we publish our weekly research and market outlook, hedgefundtips.com, and we have a podcast, videocast, which is now rated #2 in the hedge fund category via FeedSpot. It's called Hedge Fund Tips with Tom Hayes. So a little bit about our strategy simplified. We have a value tilt. We see tremendous amount of value in Indonesia, which we're going to talk about. But we make our money buying on weakness and selling on strength. I know that sounds old-fashioned, as many people found out in 2021 who like to buy strength. They're now selling the weakness. That generally doesn't work out well. And our confidence to step in when others are bailing is rooted in the deep research and the premise that the more price becomes dislocated, the more that risk has actually come out. Oftentimes people see dislocation or prices dropping and think that's increased risk. And in effect, for quality assets, it's just the opposite. The risk is coming out of the assets. And finally, we view that as increased opportunity. So let's move to the next slide, please. So I've got a decade and a half in the hedge fund business, predominantly long-short equity, value tilt across the spectrum. I'm chairman and managing member of Great Hill. Prior to starting my own firm, I worked with a firm called Cornwall Capital. You may recognize the name from the movie and the book by Michael Lewis called The Big Short. I was brought into Cornwall by the actor played by Brad Pitt. He's not quite as handsome in person, but certainly that was a tremendous experience. They were one of the few firms, by the way, that got the financial crisis correct in 2008 and 2009. And prior to that, I was with a firm called Bedford Oak Advisors. In that role, I was put in as COO of a public company we owned. My job was to sell off non-core assets, build up cash, and then purchase an asset manager. I interviewed over 100 different asset managers. We finally purchased one with $1.6 billion under management. So through that process, I learned about the business side of asset management, but more than that, seeing every strategy under the sun and what worked, what was durable, what was sustainable, and that played a significant role in how we think about allocating assets today. Graduated from Columbia University. Next slide, please. So the first fund I was at, Bedford Oak Advisors, the principal was good friends with Warren Buffett for many decades. So I was kind of steeped in the Ben Graham value style of investing, looking to buy dollars for 50 cents or 80 cents. The seed investors for that fund were Sandy Weil of Citigroup, Sam Zell of Equity Residential, Mike Bloomberg, Mario Gabelli, and Dr. Phil Frost of Teva. So it was an all-star investor cast. and interacting with these investors and having them as partners was a significant part of my formation in the business. Go ahead and move forward. Next slide. And as we start to talk about Indonesia, the number one thing that comes to mind for me is demographics, which Brian touched on. But I want to first kind of parallel them to the United States because, you know, there's a lot of pessimism that people see going on and, you know, growth slowing and geopolitical risk. And in effect, what we see is something entirely different. And if you look at the green area that I've circled with the millennials, it's the largest part of the population right now. People often look at our baby boomers and say, well, America has an aging population, they're retiring, they're selling stocks, they're downsizing. But the millennials are actually a larger size population. Their average age is in the early 30s, about 32 years old. And that's when people spend the most money in housing formation, in family formation, in spending. And those trends usually last about 10, 15 years before their spending slows down in the mid 40s to early 50s. So we think that while people are a little bit cautious right now on the developed market, particularly on the United States, we think we're actually halfway through a secular bull market that could run another 10 years, just based on where the spending is going to be, where the housing formation. If you just think in logical terms, and COVID accelerated some of this, people get, you know, meet one another, like my wife and I met in New York City. You move out to Connecticut, you buy a house, have a couple kids, all of a sudden you need a car, then you need a second car, you need a washing machine, you need a refrigerator, you need furniture, and this is the big peak earning, peak spending years for the next 10 years. Next slide, please. And if you see, these are two slides from RBC, Royal Bank of Canada. And what it shows is the long-term secular trend. Now, knowing nothing else, you would say that, you know, it tends to go up and it's followed by some sideways periods. As you see here on the right slide, you had a period from 1930 to 1950 where the market basically did nothing, and the heading above that is deflation. That was an unfavorable demographic. There were not young people, there was not housing formation. Then from 1948 to 1968, you see the market goes straight up, and under the green line, it says reflation. And that was largely driven by the baby boom post-World War II. So what we reference, the generation before the baby boomers, was called the greatest generation, those who served in World War II. They all came home from World War II, they had babies, they started housing and family formation that drove public equity markets, it drove GDP from 1948 to 1968. But again, they aged out of that. And by 1968 to 1983, again, we had a lull in those young people growing the 30s and 40s to spend, to drive consumption. And that didn't change until the baby boomers in the early 80s, 1982 to 2000, you saw another huge boom in housing formation, in family formation, and that drove the stock market to one of the greatest bull market periods in history from 1982 to 2000. But then sadly, in 2000, you were faced with my generation, Generation X, and we went from about 80 million baby boomers to about 63 Gen X. So we had a dearth of population. And that's why the Fed could be so aggressive for a period of basically 15 years. And we got no inflation because we had this kind of population lull over that period. And everyone was looking for inflation to come, but they were basically filling in the pothole left by a smaller demographic than the baby boomers, to drop off from 80 million to 60 something million. And that created that sideways trend until you see here deflation again, just like we saw in the 20s, till about 2013 when we finally broke out. And now what we're seeing is reflation. And while it feels like we had such a big correction during the pandemic, during this year, you can see in the long-term scheme of things, it looks very much like 1987 to 1993. If you look back to the previous parabolic move up, we're really only halfway through. And as I said, the largest demography in the United States is about 32 years old, and that should drive the bus for another 10 years, 10, 12 years as they're in their peak spending years. with housing and family formation. So if you look over to the table on the left, you're going to see that it shows that we're halfway up here. And that implies we could see a move in the S&P 500 if we're talking about similar percentages that we saw from in the 50s and 60s and in the 80s and 90s. We could see another move up to 13,500 on the S&P 500. So why is that important as it relates to Indonesia? Let's go to the next slide. So basically, Indonesia not only has favorable demographics like the US, but everything is growing much faster in Indonesia. So if you look at this top green area that I have circled where I said similar to millennials, the average age there is about 36 years old, which means that you have a lot of room to run the next 5-10 years, as Brian was talking about. The future is very bright. But on the back of that, unlike the United States, where after that millennial pig goes through the python, we'll probably have another 10 or 15 years of those sideways situation like we saw in the 20s and we saw in the early 2000s. In Indonesia, it just keeps getting better and better and better, okay? Because your population is growing aggressively, it's young, it's dynamic, it's educated. So certainly a bump here for the next 5 to 10 years. But if you look over the next 20 to 30 years, with the population growing while most of the West is declining, and you saw the effects of that in Japan over the last 3 decades, you'll probably start to see the effects of that in China over the next couple of decades as they have an aging population. They do not have this favorable demographic situation. The only other country that has it in an aggressive manner in Asia is India. So I think India and Indonesia are two of the most dynamic places to be looking at over the next 10 to 20 years, with particular emphasis on Indonesia. A couple points that Brian also pointed to, obviously $1.2 trillion of GDP already, GDP growth over 5% a year, and the world's largest producer of nickel. I think Brian referenced 30% of reserves. That plays a critical role in EV production, et cetera. As a matter of fact, there was a producer from CNBC Asia, I think from Singapore, that was telling me that I think Elon Musk was in town looking at some of those reserves and maybe a buyer on that front. So, major exporter of petroleum, natural gas, this demand is going to be sustained for the next 3 to 5 years. I think we're in a secular bull market in those areas. Population, as I said, 273 million. Most people don't realize it's fourth largest population in the world. And the debt to GDP, I look more at, I know Brian was talking about total debt, but government debt, just to put that in perspective, the US debt to GDP is now 125%, which is why you're seeing our Fed do more jawboning than actual tightening. Because our debt sustainability levels are at play and they can't raise too much because of the amount to service it. In Indonesia, it's only 40%. So there's a lot of runway there for fiscal expansion and support, et cetera. And that's kind of the core reason behind our interest. Now, if you move to the next slide, please. So why isn't more money flooding into the emerging markets right now? And part of that has to do with the perception of an extended tightening cycle in the United States, which, as we just saw, by the way, while we're on this webinar, the CPI numbers came out lower than expected, which now puts back on the table the Fed pausing or slowing their rate hikes. How does this impact Indonesia? Is that historically emerging markets do well as the US dollar weakens. The US dollar has been exceptionally strong since the pandemic in anticipation, or since last year, in anticipation of the tightening cycle. Well, the tightening cycle is closer to the end than it is to the beginning, and that's now confirmed with the CPI prints. People were a little concerned after the strong jobs report last week. I think this puts a Fed pivot and a Fed slowing back on the table. If you look at this chart, what I have here, the most important line to pay attention to on the bottom is the green line, which is called the the commercials. This is data that's reported on a weekly basis in the commitments of traders report by the CFTC, the Commodities Futures and Trading Commission. And what we see historically is each time that commercials are aggressive net sellers of the USD, which is a basket of currencies, USD against a basket, what we find is while they're early, they're always correct, meaning you don't want to bet against the commercials when they're getting aggressively short the US dollar. 6 to 12 months, invariably, the dollar is weaker. And I think this is really the final piece because the economics are black and white. You want to be investing in a high growth, well-managed population growing, young population economy. So the only thing moving forward is capital flows. And I think as we look out over the next 6 to 12 months, while it looks like the dollar is going parabolic, as the Fed pauses, which now they have ammunition to do so with inflation moderating, and that dollar weakens, I think we're going to see a lot of capital flows into emerging markets, and it's going to be quicker and it's going to be more abrupt than anyone expects. And that's a positive thing for Indonesia and for Indonesia equities. So let's go ahead and move on to the last slide, please. Okay, so how do we get exposure? The simple way is a broad basket. There's an Indonesia ETF called with ticker EIDO here in the US. I'm sure there are many different ways to do it from different countries, but we just want to get a broad basket exposure because for our money, there are very few countries positioned as well as Indonesia to have massive growth over the next 5 to 10 years and beyond. And we think Indonesia is in pole position on that front. The heaviest weighting in this fund, though, that one needs to be aware of, are financials at 43% weight in the ETF. I think that what we see in the well-managed, in the proper management of policy in Indonesia is that inflation has been relatively moderate, running at 3.5% relative to the rest of the world. You've seen some of the numbers in the US and in Europe. I think that gives Bank Indonesia some room to potentially raise rates over the next 12 to 24 months, maybe 25, maybe 50 basis points. And I think that's one final factor in attracting capital flows is having those rates move up, not so much where you stunt growth, but enough where you have a stable currency and you have a reasonable yield to attract relative capital flows into the markets. And I think that's really the final piece to the puzzle. As the rupiah strengthens relative to the dollar goes down. Bank Indonesia's policy can get a little bit more tight, nothing too aggressive because inflation's not out of control. I think that's really the final piece you're going to see in the next 6 to 12 months, where you're finally going to get this breakout from a 10-year plus range of that index being effectively sideways. And I think you're going to see a lot of flows into emerging markets over the next 3 years, with Indonesia being the greatest beneficiary.
Thank you very much. Very interesting presentations with the demographic and as well as the effect to the equity market in the US. And then you try to apply that in Indonesia. And then you say that Indonesia, the future is bright. Thank you very much, Tom. Looking forward to talk to you more in the Q&A session. So once again, I invite all of you to write down your question in the chat box on the Zoom platform for those of you joining us from Zoom. But I know some of you also watch and join this webinar on LinkedIn as well as on YouTube and Instagram. Please feel free to write down your questions in the comment sections because we will discuss it in the Q&A session. So we have like 2 parts of the Q&A session. First part is me asking you some questions, and later we will take questions from the participants of this webinar. I will go to Brian first. So you have spent like 31 years speak about Indonesia to investors all over the world. Like, what were the first questions they asked about Indonesia when you talked to them about Indonesia?
Yeah, so I think Unlike China, which is, incredibly well studied and well written about and is in the press, on a daily basis, Indonesia and India as well, for that matter. I think Indonesia, amongst the emerging markets, is one of the least, understood and one of the most misunderstood, right, countries in the world. And so it's usually a long education process for people who are not familiar with the country. And unfortunately, Indonesia is one of these places where, prior to 2000, had a pretty volatile economy and financial markets, and people have long memories. And so really up front, I think the opportunity that Tom referred to is pretty quickly understood. The demographics, the secular GDP growth, the commodities opportunity, but it's really overlaying that, on the fact that from a risk perspective, the country looks really good, right? How it's been managed both from a monetary perspective and a government spending perspective, is something that's less understood, that I try to spend a bunch of time with. Our investors are U.S. universities and foundations and pension funds, and tend to be long-term investors. We have a 5 to 10 year horizon, investment horizon. And so the trends that I spoke about and Tom spoke about, are very suitable to that type of investing. And I think once people get comfortable, with the risk, and they look at the relatively high levels of growth, it's quite interesting. And I think nowadays, having just come back from the States, China has been a major asset class in the country, in the United States, in Europe, amongst the investment community for some time now. And typically those, country allocations, have been increasing over time as China's economy has gotten bigger and more robust. I think now you're starting to see some reversals in that, whether it's China's economy, whether it's, geopolitical stress or whatever. And I think one of the most interesting things that I learned over the past, month or so is that there's, however small, shift in allocation away from China to other countries. And I think India is going to be the primary beneficiary, of that, but also, Indonesia and the rest of Southeast Asia, right? So not only do you have a situation where on a nominal basis, the country's looking, more attractive, but on a relative basis, it's also looking very good. And so I think, as a result of that, you're going to get, more FDI flows, more fixed income flows, lower cost of capital in country, it's a virtual flywheel of
Hello, Brian. Are you still with us?
I am.
Yes. Okay. Connection.
So anyway, I think there's potential surprise to the upside in the country as a result.
What kind of potential surprise?
Well, I think there's a wide dispersion of, you look at, where GDP, people look at where GDP growth will end, average over the next few years, how the rupee will perform, what the current account deficit will look like, what some of the FDI numbers will look like. I think, you can never predict these things, in emerging markets, but I think all of the things I talked about are more likely to surprise on the upside than the downside.
Interesting. So when you discuss about risk in investing in Indonesia, like if we compare that, for example, India, you mentioned that India is a country benefit most from the asset shifting away from China. If we talk about risk, investing in India and in Indonesia, how would you advise investors about mitigating risk in Indonesia?
Yeah, so look, I mean, I think when you invest in Indonesia, you accept a certain amount of risk, and building whether you're a private investor or a public investor, building a different portfolio, is important. Making sure you're not over.
So I think it's freezing again, if I'm not mistaken.
Yeah,
Your video, sorry, but yeah, maybe you can continue. So you mentioned about building portfolio. This is one of the challenges. I would like to discuss more about the portfolio that your Falcon House partners presented before this Q&A, and then can you please continue on the risk mitigation that needs to be considered by investors?
Yeah, as I said, a diversified portfolio, buying, the right sectors, and while you can never time markets, there's definitely more favorable entry points, valuation points, to what Tom said earlier. Buying when people are selling, is particularly effective, in places like Indonesia, and results in, long-term, return outperformance. And so these are the things you need to do, to make sure you're, mitigating risk in, in your investments.
Okay, very interesting. I will go to Tom. Tom, I think I would like to ask about your opinion. So Indonesia equity market is one of the best performing markets at this moment, year to date, in Asia Pacific. Do you think that this will continue in the rest of the year, that Indonesia equity market will outperform its peers in Asia Pacific?
I do think that's a strong possibility. I mean, to Brian's point, you want to buy things when they're out of favor. People have been buying Indonesia, so it's had a big move off the bottom. That's the bad news. The good news is it's basically done nothing for over a decade. So I think there's a lot of pent up demand, and when these things tend to break out from long-term ranges, there's no overhead supply, meaning everyone in the market is making money. And that tends to persist. And I think we're really on the cusp in the next year to 2 years where we're going to see Indonesia equities break out of a long-term range. I think emerging markets as a whole are going to break out of a long-term range. And an asset class that's been kind of left for dead of late is going to start to see panic buying and fear of missing out as we move forward. And part of that's going to be certainly the dollar needs to level off and stop going up. And I think we're going to see that Fed change before the end of the year. And that's really going to help emerging markets. Just to touch back on what I was saying about Bank of Indonesia, raising 25, 50 basis points and stabilizing the currency to attract capital flows and relative yield. This is not only important from that front, but it's also very important from the standpoint of banks. You want to, and if you look at your equity market with 43% weighting in banks and financials, you really want to incentivize banks, and Brian actually referenced this, to extend credit, to lend. That's going to drive growth going forward. They're very conservative now, and that's served them well. But moving forward, with a little bit higher rates, I think you're going to see more lending from the banks, and that's really going to drive growth and make Indonesia the outperformer in emerging markets across the world.
Thank you for your insight. So you think that 25 until 50 basis point is enough to attract investors? We see some capital outflow in the last few months, though year to date, we still receive capital inflow. Do you think that 25 basis points to 50 basis points is enough to make Indonesia paper assets attractive to global investors?
Yeah, I think the most important thing is you want to see a little bit of strength in the rupiah. You want to see banks incentivized to lend, but you don't want to tighten too much either to choke off the beautiful growth that you're seeing in Indonesia. So I think it's a fine line that Bank Indonesia will have to walk, implying that they want to raise rates, but not doing it too quickly. And given that your inflation rates remain subdued at 3.5%, I think 25, 50, maybe maximum 75 basis points over a year and a half period should be sufficient to put a floor in under the rupiah, have a decent relative yield, and attract some foreign capital flows. But really, you want the banks to start to make as much money as possible, given the weighting in the equity index. If that equity index starts to break out after 10 years of moving sideways, you're going to start to see a tremendous amount of capital flows, and that's going to really come down to the bank's profitability. So that action by Bank Indonesia would help the public banks, and that starts to create, as the public equity markets go up, then private foreign direct investment gets attracted to the market, and people tend to chase performance. So I think that's kind of the last piece to the puzzle. Everything else is on your side. You really can't screw it up. I think the future is extremely bright over the next decade plus for Indonesia.
Thank you. So Jakarta Composite Index right now is about 7,000 level. Talking about projections, do you have a projection for this year or next year?
We take a longer term view, but certainly it would be a reasonable expectation. Over the next 7.5 years, you could see the index double from here. 10% growth, compound annual growth rate for the major indices, given the demographics, given the policy, given the positioning. I think you're at the forefront of everything, whether it's digitization, which has got a long lead time, whether it's a commodity secular boom, whether it's consumption, as Brian referenced. I know he has some companies dependent on that. I think you've got everything, growing middle class. For the equity markets not to reflect that would just be an error in policy, effectively stymieing or putting a governor on what should have been at least a 10% CAGR in equities, and probably a lot more if you do it right and you incentivize banks to extend credit, and you keep a floor under the rupiah with constructive Bank Indonesia policy. You could see a run more along the lines of what you saw in the U.S. in the 90s, where you just see really massive flows. And if you look at a little bit more, 15%, then you could see a doubling in the index over the next five years. So these things are not guaranteed. As Brian pointed out, there's always risk in emerging markets, but those are the basic steps that Bank Indonesia should consider moving forward to attract capital flows. And then the rest, you've got the tailwinds already in place, and the future is certainly very constructive moving forward.
Wow, very interesting. I would like to ask for your insights later about interesting or promising sectors other than banking. So I will go to Brian O'Connor first. So I would like to ask for your opinion. So you have been talking to investors, you say, for 31 years. So we have been through like a different economic cycles as well as administration, and we're about to have general elections in 2 years. So how do you explain this to investors? Do they have like some doubts or questions over the power transition that will be held in Indonesia in 2 years?
Yeah, so I was with my team today talking about this in a conference room and kind of debriefing on my meetings in in the US. And I think the Indonesian press are much harder on themselves than investors are, right?
Indeed, indeed.
I think the election, the drama around, the local drama around Indonesian elections, is not reflective of, enhanced volatility in economic performance, or financial markets, right? And so since the transition from Suharto to a full democracy, it's actually, I have a very, good friends in the State Department in the US, and arguably it's been the most successful transition to democracy from, a dictatorship or an authoritarian regime, in the emerging markets post World War II, or one of the most successful, right? And so you've had really smooth transitions of power, since 1998, and I suspect that will continue, right? I think there's a whole bunch of political, there's a whole bunch of presidential candidates for the next election, and my view is any one of them will be fine, right? One of the things that characterizes Indonesian politics is not ideology, but a shared view that the country needs to develop, right? And so the economic policies amongst all the political presidential candidates tend to kind of be the same, right? And so it's something actually that I don't spend any time thinking about or worrying about, because I it's going to be fine.
Okay, so Brian, Indonesia economy heavily relied on commodities so much. For example, we're doing pretty well right now because of the amazing growth of our commodity exports. Some of us are talking right now, what if the commodity booms over in, I don't know, this year or next year? What do you think could be the source of growth for Indonesia that will be sustainable and not really cyclical? Do you think like digital economy can be the one, or other thing?
Well, so look, I think there's a difference between yesterday's commodities and tomorrow's commodities, right? It takes 7 years to build a copper mine. The world will be structurally in a supply deficit for copper, moving forward because of electrification. Similar story, with nickel. Similar story with alumina and bauxite, right? And so, as the world deals with climate change and tries to accelerate electrification, we are continually going to be in a supply deficit of these key commodities. So I think it's secular, it's not cyclical. And given Indonesia's position and really smart government policy of bringing, it's just not about mining, but it's about processing, onshore. We're talking about Elon Musk, a little while ago. Today, it showed up in the newspaper. Minister Luhut announced that Tesla basically signed a 5-year contract to buy, nickel and nickel-related products for Tesla's batteries, right? And I think they're not going to be the only one, right? And so I think commodities, will provide some secular growth tailwinds to the country. And to your point of digitalization. So not only do you have the commodities, the demographics, right, but you have, digitalization, of the country, and I think the country's gone a bit startup mad, and the amount of capital going into VC funded businesses is truly astonishing. But I'll give you one example in our own business. One of our own business, we own Harvest. You probably know Harvest.
Yes,
It's
we love
the
their cakes.
Yeah, it's the largest cake manufacturing retailer in the country. Pre-COVID, we did about 10% digital sales. Now we're doing, 40% digital sales
Wow.
through the aggregators, Gojek and Grab. Our EBITDA margins expanded by about 6%. Again, this is all because of the capital that was put in, the founders, and in these businesses. And we're seeing that benefits on the procurement front through new software and sourcing. human resources, I think in a wide range, of businesses, you're just seeing massive margin improvement because of digitalization funded by equity from VCs, right? And it's really benefiting, the country, and you're just starting to see the benefit of it, right? This will play out over many years.
Interesting. So I would like to ask, for example, investors are interested to tap in the opportunity of the EV related commodities. What suggestions or advices that you provide to them as in the best way to invest in the industry?
I would say, investing in commodities is a tricky thing to begin with, and as you get into emerging markets, it becomes more complicated. I think the best thing is to find a great local partner that you trust, and to invest that way.
Local partners. Talking about local partners, like I think it's a very important for the investors, as you mentioned, that Indonesia is one of the country that is least studied if you compare it to China or other market. So how important it is to have local partners to actually determine the real value of a company or the businesses, because in some cases we have maybe seen the inflated value of a certain business or companies.
You do a lot of due diligence, yeah. So I think, like anywhere, choosing partners, getting to know those partners, having relationships in government, both the national government, and local government, long-term investor, committing, people and time and energy, to doing this, being a fly-by-night investor that's coming in and trying to make a quick dollar, by buying part of a nickel mine is probably not going to end up well. And so these are the things, like, to be a good investor, you have to put in the time and effort over a long period of time, and do what you're supposed to do.
I think so. It's better to rely more on the due diligence that is conducted by the investors, because we received questions from LinkedIn from Mr. Eman Marpaung from MFCG. So he asked that what I see here in Indonesia, that Indonesia Financial Services or our SEC and also the Corruption Eradication Commission have not actively protect investors from bad companies that inflated their share price by manipulating their financial information. It's quite different compared to the US, where the SEC and the DOJ actively access stock hunting to identify those bad companies. More than happy to share and discuss about this. So what do you think about these questions that we received from LinkedIn?
Yeah, well, look, there's issues everywhere, right?
Indeed.
And the Indonesian capital markets, while underdeveloped,
I think we experience again some trouble in the connection. We will discuss it later again. Okay, Brian. Okay, I think it's the connection works now.
clearly
Okay.
we need better internet. So look, I mean, that's an easy thing to say. It's a much younger, it's an emerging market. It's a younger capital market. There is, as you develop and grow, there's always issues. I think, looking back to when I was a young banker in the 90s here, it's gotten significantly better, right? I think investor protections are better. There used to be 300,000 retail investors, in the Indonesian stock market, as a result of some of the technology platforms, that have been developed, in the US, the most famous of which I think no less than 5 Robinhood type platforms, which has really captured the imagination of investors of all ages. And now you have 3 million retail investors, in the country. And I think the government, from a regulatory perspective and an oversight perspective, understands, you've now got 3 million investors, a lot of which are putting their life savings into the stock market. And so, you're seeing enhanced regulation, right? It's never going to be perfect. There's always going to be issues. But it is trending in the right way.
Enhanced regulations, and we have progressed Indonesia regulation and also its financial industry. Thank you very much for sharing your insights. I will go to Tom again. Tom, as I mentioned before, I would like to ask for your insights on promising sectors that you find interesting other than the banking sectors.
Yeah, well, certainly we love banks because any of the sectors that do well, banks are going to have a piece of that action. But leaving that aside, I think you want to be focused on the middle class, the consumer, the emerging consumer. If you look at Astra International, as you have a growing middle class, they need cars, they need motorcycles, they need all of that. That's one of the key things that people buy once they have money. I think if you look at Unilever Indonesia, I think that's personal care products, consumer staples. As more and more people enter the middle class, that's going to continue to grow. So I think, when I look at, as it relates to the capital markets and the safety, et cetera, when we look to invest in emerging markets, we do like to take a broad basket, and we do like to go as high as possible up the food chain. Because there's generally more transparency and more scrutiny of the larger companies. So, or you need a manager on the ground like Brian, who's doing extensive due diligence on private companies and knows the partners and knows the local government, and you're paying for that extra expertise. But as it relates to public markets, we really try to go for larger cap companies, highest quality when they're out of favor. And as I said, these indices have basically been sideways for a decade. I think we're going to see some of these larger companies double and triple over the next decade as the middle class emerges, the population grows, and stable policies are continued.
Looking forward to having the breakouts from the long sideways of Indonesia equity market. So I will go to Brian again. So we look at the portfolio of Falcon House Partners. Maybe you can explain why you pick up. We seen healthcare there, hospital, and then leisure, culinary, and a premium chain of restaurants. We can you can share to us like the investment thesis behind the portfolio that you're building for your clients.
Well, I think Tom said it, pretty well. Like we're investing, in the Indonesian middle class, right? And if you look at, the sectors that we invested in, within the consumer economy of Indonesia, it's those sectors that are going to grow a multiple of GDP growth, right? So there's this concept called the McKinsey S-curve that as countries reach $2,000 to $3,000, $4,000 per capita GDP, there's a shift in consumption habits. You go from government clinics to private hospitals, from wet markets to modern supermarkets, from vegetable protein to animal protein. You're moving up the consumer value chain. And that's what we're trying to capture, in the portfolio, quite frankly. It's a quite a simple, investment thesis, that's proving to be, consistent with the way a lot of people, look at Indonesia. I think when we first started Falcon House, in 2011, the big focus is on commodities. But we actually think the most interesting thing is actually, the Indonesian consumer. One of the things that I have a slide on is the Indonesian consumer, typically is the most optimistic, or one of the most optimistic, in the world, right? And so despite the fact that you didn't have substantial fiscal or monetary stimulus during COVID, you still had pretty healthy spending by the consumer, right? So I reference our cake business because that's an interesting proxy, for the consumer in Indonesia. We grew the business 35%, during 2021. People just ate a lot more cake, because they were locked at home, and we got some COVID benefit. I'm
They
sure.
sent cakes for those in isolation for COVID.
Yeah, but the point is they continue to spend. Like a lot of times, in other emerging markets, when times become tough economically, there's a bias towards reducing spending. You don't really see that in Indonesia, and so the consumer investment thesis is actually plays through cycles, in the country. So that's one of the reasons we're particularly excited about the strategy.
So you're investing in Indonesia middle class, and do you think like the middle class of Indonesia will continue to grow in the future?
Well, Indonesia's, just the pure demographic argument. We're having more babies. I think the number is 2.4, here in Indonesia than most places, and that trend's continuing. The population, is becoming more educated and healthier. One of the things that the president has done well is greater social spending. So, the healthcare system's developed quite rapidly. One of the things that Indonesia definitely doesn't get credit for, but it has one of the best national health insurance systems in the world at this point. And healthcare is now available to most of the population. You can't have solid long-term economic growth without having people healthy. And this is a big factor. Education as well. The population is becoming more educated, hopefully avoid the middle class trap. So yeah, I mean, I think it's going to continue to grow, and with digitalization, greater access to capital, greater access to technology, it'll only grease the wheels of growth even further.
For your investors, are they satisfied with the return that they receive from investing in Indonesia? Maybe you can give us like an illustration about the number, the return for certain time horizon.
Yeah, so our investors, look for 20% type returns, over a long period of time, which is quite high. But I think they're, that's the type of, profile of a business. You buy a business, which is growing its top line 15 to 20%. You improve margins, you buy at a good valuation, and that's really the formula. And now, what we're seeing, uniquely in Indonesia right now is with some of the challenges in China, global big investors, both strategic and financial investors, are spending more time in the country. You're even seeing domestic Chinese corporates and financial firms, financial sponsors come to Indonesia looking for investments. And that's super interesting. So that provides, a good way for us to monetize our portfolio and to get, generate pretty good returns for our investors.
So for exposure to Indonesia market, how much that you suggest to your investors as in percentage allocation?
Well, sorry, I mean, that's a very complicated question. I think Indonesia, Indonesia today is not really a standalone asset class, at least on the private side, which funds benchmark themselves off of. I think when big institutions invest in a private equity firm like us or others, they're looking for incrementally higher returns versus the rest of their portfolio, but it's not a significant amount, which is the opportunity for the country, moving forward. I think there's such a small percentage of institutional capital allocated to Indonesia today that even small shifts, and I think Paul kind of referenced this, I think we are breaking out of a decade-long channel, where you're going to see an increase in allocation institutional portfolios to the country, and it doesn't actually take that much. So you're going to, over the next couple of years, you're going to, see some pretty high return years, I think, as a result of that, and particularly, in the public space and in the large caps. That's almost certainly going to something I think we'll see.
Thank you, Brian. So I will go to Thomas again to talk about currency risk. So due to commodity boom, Indonesia saw its current account is not deficit as it used to be for the previous years. So do you think, like, right now, as I mentioned when I asked a Brian question too, like some investors in Indonesia currently are talking about when this commodity boom, of how long will it last, and how about our current account, will it return back to current account deficit and not surplus as we enjoy right now due to the commodity boom export? So talking about currency risk in the future, other than your point of view that Indonesian central bank needs to move up their rate to really make a real yield attractive to Indonesia. Talking about currency risk, what is your point of view for longer period, longer time horizon, Thomas?
Yeah, I mean, short term, I'm agnostic. We were aggressive buyers. As I said at the beginning, we like to buy things when they're out of favor. So we were very aggressive buyers of high quality energy companies in 2020 during the pandemic. I think we might have even been on CNBC Indonesia talking about that. And then earlier this year, when everyone who hated energy in 2020 was now chomping at the bit to buy as much as they could, with many of these companies up 100, 200, 300%, we were laying off some of that risk into the euphoria. They've since opened the trapdoor. You've seen many US producers down 20, 30, 50% in the last few months. But leaving aside the short-term noise, I would say if you look 3 to 5 years out, the commodity boom is really just getting started. I think this is a secular move that Indonesia is going to benefit from and participate. There's been a dramatic underinvestment in commodities, namely energy, but also to Brian's point about it takes many years to get a copper mine online. The demand continues to grow. Overall, the world's population still grows despite the developed market having lower birth rates and lower future growth. Indonesia has not subscribed to that neglectful policy. You're continuing to grow 2.4. I think Brian mentioned 2.4 births per couple. So the future is bright, and I don't anticipate a slowdown of the commodity secular boom. You will have fits and starts. There will be corrections because you'll get the short-term euphoria, everyone chasing things after they're already up a lot in the last year and a half. But I think if you look out for the next 3 to 5 years, demand continues to grow, and Indonesia is perfectly positioned to continue to benefit.
Interesting. Thank you very much. I will go to Brian again. We talk about omnibus law. Do you see, like, in the sectors that you work on, I mean, you have portfolio in it, like what are the most significant changes that you find with the issuance of omnibus law in the country?
So I think the labor regulatory environment, number one, and number two, the licensing environment in general are very important elements of the omnibus law, right? And so labor flexibility, in the country was poor and has been poor. It's very, Indonesia's in many ways, at least historically, been incredibly socialist in its approach to labor, right? And there's reasons for that, and I think things like minimum wage and healthcare benefits, are incredibly important to the workers in the country. But some of the laws, and regulations around hiring and firing labor were extremely onerous and prevented, capital formation and, and investment. So those things are changing, right? Which I think will, engender more foreign investment, and more domestic investment, right? And so that in my mind is very critical. And then, sector by sector, getting capital in efficiently from a licensing and permitting perspective across a wide range of sectors is something that's been, a major issue in getting FDI in the country, and that's being addressed. And it's being addressed at the same time as you have many ministers and the president, actively courting investors. And I know, I mean, even we're not infrastructure investors, we're not big commodity investors, but we do meet these investors when they come to the country, and it's super impressive when ministers or the president get involved to get rid of red tape to facilitate investment, right? And just do so to get things moving in the economy. I mean, that didn't happen before. It's a pretty rare occurrence in the emerging markets, but it's just indicative of the administration's commitment to developing the economy. So, and it's all part of, not only the letter of the omnibus law, but the spirit of the omnibus law, and the intention of what it's trying to do for the country.
And I would like to ask about the synchronization of central government and local government regulations. Do you find it progressing?
I don't, to be fair, I don't see it on a day-to-day basis because, we're not triangulating between local and domestic governments. But I think with big projects, particularly in the natural resource and the infrastructure sectors, yeah, it seems to be working quite well.
Yeah, the omnibus laws also has like some tax regulations in it. Do you think like it is favorable for investors right now?
Yeah, I think Indonesia, has a fair and transparent tax regime. I mean, part of the problem, in the past was transparency. Digitalization is something that's helped out quite a bit from a tax perspective, because there's transparency with the tax office, around policy and payment, which investors love, right? They love the fact that they pay their taxes online, and they don't have tax people coming to their office to collect tax payments. And it seems like a very simple thing, but it's really helped people get comfortable with how they're going to be taxed, and therefore the expected returns they're going to make when they come in, and the tax breaks. Yeah, the tax breaks, depending on what industry you're in, are helpful for sure. But what's more helpful is that the government is consistent in the application of those tax breaks, and it's transparent on how and when you pay.
Thank you, Brian. So I will go to Mr. Cristofita Belotto. From our discussion, I think it is very interesting to find a very positive tone of insights about Indonesia from Thomas as well as from Brian. It seems right that our media coverage in the country tend to underestimate how much progress Indonesia or how much progress our country has made in the past years. So what is your take on that, Mr. Belotto?
Alin, basically we can see and we can listen from Brian and Tom that Indonesia is very, very good. And we can see the prosperous Indonesia in front of our eyes. We can see that we have a new generations, and after that, there are many other generations. And the quality of generations of Indonesia right now is totally different from the last generations. Where they are very, very smart. If you notice that we have Citayam fashion week, that's made by ordinary people from village, and they can make something very, very unique and radical. And this is become a trendsetter for Indonesian. Basically, this is very good. And a lot of people from global, such as Japan, they appreciate that kind of movement. So basically, we can see, although they are not very smart in school, for example, in education, some of them are not educated, they are not go to school, but they can create something that very, very unique. And basically, fashion is very important. Fashion is consists of creativity, and basically Indonesia young people is very creative. So basically, we can see from what we find in our neighborhood that we can tell that Indonesia is very prosperous in the future. Yeah. And basically, that's the reason why we make New York Indonesia Investment Forum. And we do it by sectors, and we do it monthly. And that's why, because every time we make and every time we move, we run this program, the snowballing effect is very huge. And we believe that in every single program, there will be Indonesian that get benefit from global investment. And people in the globe, in the global investment, will more understand and love Indonesia. Indonesians say that there's no love if we don't know. So we have to know each other first. After that, we fall in love. And after that, we marry. We invest. We invite the capital market and non-capital market investor also. So basically, Alin, we can see from the explanation of Brian and Tom, Indonesia is very good. And the other thing I want to say, and I want to honor Brian, because Brian is the one who teach me and give me the example how to make a roadshow during the crisis in 1999. We make a Indonesian banking restructuring roadshow, Indonesian roadshow, to Singapore, Hong Kong, London, New York, and Boston. And at that time, our team who go aboard is very small compared to the team that Indonesia usually send. Usually, Indonesians send more than 50 people, but our team is only less than 20 people and very effective. We meet with the investors, we make a one-on-one meeting, and there's a deal. So basically, at that time, during the Glenn Yusuf era, basically, we don't sell the asset 10 cents a dollar, but we sell in very good price. And that's why we get more money at that time to fuel the Indonesian economy at that time. So basically, with that kind of lessons, we start the Indonesia Investment Forum in Singapore in 2013, and also in Hong Kong. And now we start to move to New York. I back to Alin.
Okay, looking forward for the in-person conferences in New York, because
September.
the event is called New York Indonesia Investment Forum by Sector Series. Thank you, Mr. Wiloto, for sharing your experience. And I would like to mention again some of the point from our highlights from our discussion today, that Indonesia has long-term sustainable growth. It's very promising, and we have low budget deficit. And O'Brien mentioned that he believed that Indonesia will pay with dividend for many years to come. And also we have strong banking system. Tom also mentioned how important it is to have a strong banking system, and the banking sector in Indonesia is still very interesting. And we also, Indonesia has lowest GDP volatility among its peers. And our country also has applied a very disciplined and prudent fiscal as well as monetary policies. And our president, as Brian mentioned, is doing terrific jobs, including by improving or ramped up our infrastructure spending. So I would like to ask for Brian how crucial or important it is to continue the infrastructure development and commitment from that has been carried out for this past 8 years for the next administration.
So look, I think it's a prerequisite for continued high, economic growth and economic efficiency in the country. Up until recently, it was cheaper to ship things to Medan to go through Singapore first, as opposed to shipping, directly. Whether it's power, ports, airports, toll roads. These areas are absolutely critical, for the economy to function, properly. And and if you, as you live in Indonesia, it's already brought great benefits. And as I said, I don't think it matters who comes in. The program has been, so widely successful that whoever is running the next administration, I would imagine will continue.
So other than the logistics, what do you think needs to be improved for Indonesia to make its ease of doing business better?
Yeah, well, I think the regulatory environment continues to need to be streamlined. The legal environment, the sanctity of contracts, while good, always needs to improve. And I think if they do these things, capital needs to feel welcome at home, and I think that's happening in Indonesia. But they continue. The risk is, in good times, countries tend to become complacent, and I think the risk is, Indonesia performs very well, and it stops reforming, stops improving. I think that's a real big risk, because it's happened before in this country, it's happening elsewhere, and so, mindful that capital can go anywhere in the world, and if you want it to come to Indonesia, you need to listen to the needs of that capital and proactively address it, in the short and long term.
Okay, capital needs to feel welcome in Indonesia, Brian. Very strong message. And we think we still have 7 minutes, and I will take this opportunity to have a closing statement from each panelist. I will go to Mr. Christopher Wiloto first, as the founder of Indonesia Investment Forum. Your closing statement.
Alin, basically, I'm very happy with this two-day webinar with you, Brian, and Tom. And basically, can open the eyes of global investors, and also open the eyes of Indonesians, because Indonesians now, we have so many media, and of course, media belong to some people who have power, and basically, they're so scared news about Indonesia. But we can see that basically, from the eyes of foreign global investors, they have a hope, and not only hope, not only rhetoric. They make the very good presentations with very rigid data, informations, and this is very high educated people. So basically, I want to say to all fellows in Indonesia, let us open our eyes. Let us open our mind. Let us open our heart. That basically Indonesia is Indonesia. Is Indonesia. Is Indonesia. Indonesia is very unique. Nothing compared to Indonesia. We have human resources. We have young people. We have new generations. We have natural resources. And we have so many luxurious, fertility. Our land is very fertile. We can plant anything. The weather is very, very good. We don't have any snow. We don't have any typhoon, storm. And our ocean is very huge, deep, and we have so many fish and so many things in the sea. We have so many things up the soil and beneath the soil. And basically, our people is getting more educated, more clever. And the most important, we can see that basically the new generation have the new standard of integrity. This is very important. You see that in many areas, corruption is getting down because of the young generations. Even young generation, they don't smoke. Before, they are smoking a lot. They know about the health. And we can see now Indonesian people in age of 50, for example, they are very healthy. They can run. They used to join the marathon. So basically, the quality of life of Indonesia is getting better. And the index says that Indonesian people is the most happiest people in the world. Yes, because we have so many things. Of course, if we only focus on the bad news in the media, we think that Indonesia is very bad. But we have to focus our mind in positive thing and good news. And basically, we do the New York Indonesia Investment Forum is to spreading the news, the good news about Indonesia to global investors. Not only once a year, but every month. Every month we make a conference, in-person conference. And not only that, we make the free webinar. The strategy of free webinar is very strategic. Why? Because with this kind of technology, we can spreading the good news to the world. We can go to Japan, Hong Kong, Asia. We can go to Middle East. We can go to US, Canada, Europe, Australia. And basically, the snowballing effect is there. And the problem of miscommunications is we can make a bridge on that so people will understand Indonesia. When people understand Indonesia, they will love Indonesia. And if they love Indonesia, they will invest. They will marry with Indonesia. Like Brian loved Indonesia. And for 20 years ago, he moved to Singapore, Indonesia. I know him very well. He's very, very strong people in industry, not only in Indonesia, but in New York also. So basically, he really understands. And Tom is very famous. Everyone knows Tom's. Every media knows Tom's. And when I asked Tom to join, I'm so happy when Tom said yes. So tonight is very good for us that we can get the good information about Indonesia. This is not fabricated. This is true. They mention it by their heart. If you ask the very sharp question, they can answer. So basically, the information is valid. So basically, for fellow Indonesian, open your eyes, open your heart, and see that your future is very bright.
Our future is very bright. Yes, indeed. Thank you, Mr. Christoph Itawiloto. We'll go to Tom first. Please give your closing statement.
Well, thank you very much for having me. This has been an honor to join you, and hope to meet you in New York shortly in coming weeks. I would just say to public market investors with an emerging market exposure, take some time and burden yourself with the facts, because if you are not overweight Indonesia over the next 5 years, you will underperform relative to your peers. And that's really the number one thing you need to know. Indonesia, I think, number one in terms of potential over the next 5 years, in terms of growth rate. I think India maybe secondary, and then the rest of emerging markets behind that. So as you move forward, look at the facts, look at the growth, look at the population demographics and allocate accordingly. And I think you'll be very pleased as we look out in the next half a decade.
Wow, very strong closing statement. Thank you very much. So please, like if you don't overweight Indonesia, you will underperform compared to your peers. Interesting. And I will go to Brian. As Mr. Wiloto said, you fall in love with Indonesia. Your closing statement, Brian O'Connor.
Well, I think I'm going to bottle what Tom said and send it to my investors. To begin with. No, I think, thank you for having me. I think a lot has been said positive about Indonesia. I will say, to all the Indonesians on the video that, every day, every week, the country continues to need to improve. My point around capital needs to feel at home, is very important. So, why I think, Indonesia will continue to shine in the limelight, that comes with it a certain level of responsibility, to that capital and to the country's population, and so whenever I meet with, the government, I emphasize this point because the opportunity set for the country, is once in a lifetime. We're at a generational, shift in the country right now. There's so many positive factors that can inflect the economy towards a higher trajectory, and benefit the country for Indonesians for generations to come. And now is really the time. And so it's super exciting. Got a lot of hard work to do, but for doing this, and I think these types of things are very helpful for the country because Indonesia of marketing.
Again, I think we experienced some connection problem.
So just end on a positive. Can you hear me?
Yeah, a bit. Please continue, Brian.
One of our businesses is the largest fast food company, the Rigo. You may have heard of it. Featured in New York in about 3 that's overlapping with your conference, but in the we all look forward to that.
Yes, looking forward to that. Thank you, Brian. So now is the time, and Indonesia is the place to be. I think thank you very much. I think this webinar has opened all eyes. Yes, opened all eyes as Indonesia to really appreciate what our country has achieved, what Indonesia has done so far. We have progressed and we have so much potential that make Indonesia will continue to shine, just like Brian O'Connor has stated. I really appreciate your sharing your thoughts and experience and knowledge here, Mr. Brian O'Connor and Mr. Thomas J. Hayes. Thank you very much for sharing your knowledge and spending the time with us and making the time today. We really appreciate it. You're helping this country a lot. Thank you. All the best on your future endeavors. So once again, I would like to also extend my gratitude and saying thanks to all parties who have support New York Indonesia Investment Forum by Sector Series 2022, Indonesian Young Entrepreneurs, Power PR Indonesia, Waskita Karya, Mitratel, Daya Mitra Telekomunikasi, Hammerslag, Sulzberger Board Capital Markets, Wijaya Karya, Hutama Karya, Semen Indonesia, Kata Data, Kitacom, Strategic Indonesia, PTPP, Belindo, Great Hill Capital, and Falcon House Partners. Thank you once again for your support and your presence. We really appreciate it once again. And we invite all of you to invest in Indonesia. Should you need advice or assistance, please feel free to contact Indonesia Investment Forum. Just visit our website, www.indonesiainvestmentforum.com, to stay updated on our upcoming events. So stay safe and see you in New York. Finger crossed in late
Bye, everyone.
September. Thank you. Bye,
Thank you, everyone.
everyone. Thank you for all
Thank
participants.
you.